Hey everyone, welcome to my video, and today in this video I'm going to tell you how I missed out on a large chunk of gain due to this one mistake. So for trader, trading is his active income, but investing is a passive income. So when you actually end up investing, pledge the margin and start trading, without you even realizing, your trading capital will start to compound. So as and when the value of the stock starts to increase, even your trading capital increases. But because of this one mistake which I did, I lost close to around 50% gains which I could have potentially got. So today I'm going to tell you what was that mistake and what are the things that we can learn from that. So whenever we talk about investing, there are four broad kinds of investors. The first one is the value investor who actually tries to look for companies which are doing well but the stock isn't performing. So one such example is Kotak Bank. So you can see that even though the profits is increasing, Kotak Bank from the last 3-4 years has gone nowhere. One more classic example in this case is ITC. So again, from 2017 till 2023, even though the financials were excellent, the stock didn't perform at all. So the second kind of investors are people who try to bet on turnaround stories. Let's say there is a company with huge debt and the financials is very poor. The stock will generally be beaten down quite a lot. And these investors want to come and buy that stock expecting any kind of turnaround stories. In case if the business prospect starts to improve, then the stock is going to shoot up. And one such example is Suzlon. So you can see that Suzlon was once trading at 2 rupees and now it has gone to 23 rupees. So it has almost grown 12 times from its low. The third kind of investors are people who look for consistent compounders. So that means they don't want exponential returns. They just want their stock to grow at a good consistent rate of close to around 10 to 15%. So one such category is, for example, ICICI Bank. So you can see that ICICI Bank has consistently compounded the wealth close to around 15%. And the fourth kind of investors are momentum investors who actually try to pick stocks which are almost at 52-week high or all-time high and try to ride the rally. So one such example is TVS Motors. So once it broke its all-time high somewhere around 2022, so you can see that the stock has almost doubled. So even ITC is a classic case of momentum. Once it broke its all-time high of close to around 350 in 2023, in a very short span of 3 to 4 months, the stock has nearly gone up by 30%. So now if I have to categorize myself as an investor, so during the initial period, I was the consistent compounder investor. That means I didn't want to take risk with my portfolio. So I just wanted to compound my portfolio at 10 to 15%. So that's the reason I went and picked HDFC Bank, Bajaj Finance, Kotak Bank. So during the time of 2019 and 20, because till then they had actually compounded at a consistent rate and I was expecting them to compound going forward also. But here is where I was wrong. So the thing is, the stocks which I ended up picking. So for example, in this case, let's take a look at HDFC Bank. So when we actually take a look at HDFC Bank, from 2019, the profits have compounded at a CAGR of 20%. So you can see that from 2019, the profits have almost doubled. But when we actually look at the chart of HDFC Bank or the stock price of HDFC Bank, from 2019, the stock has hardly gone up by 25%. So even though the profits have doubled, the stock has merely gone up by just 25%. So similarly, when we take a look at Kotak Bank from 2019, again the profits have doubled where they have compounded at 19%. But from 2019, the stock has nearly gone up by 10%. That means there is no returns at all. So when we look at the profit and loss statement of Asian Paints, here again you can see from 2020, the profits have almost doubled. But when we actually take a look at the stock price has just gone up by 20%. So these are the kind of investments which I was actually stuck with. So let me start naming them. So apart from the companies which I already showed, so there was Nestle, there was Pidilite, there was Page Industries. They were consistent compounders till 2019 and 20. Post that, even though the profits were going up, the stock price didn't go up at all. So if you actually take a look at my portfolio, which I'll be showing you towards the end, my portfolio was hardly up by 30%, where during the same time, Nifty went up almost around 100%. That means without even having to break my head, if I had just invested all the amount in Nifty, I would have almost doubled my money. So now, how can I actually try to improve my returns better than Nifty without deviating much from my approach? So there's a very simple trick to this. One, we can just make a list of all good fundamental companies. Let me take the banking sector, right? So if we take banking sector, the top banks in the banking sector are HDFC Bank, SBI, ICICI, Axis, and Kotak. Let us just stick to these five companies. So now we know for a fact that all these companies consistently compound their profits. Now let me open ICICI Bank during the same period, right? You can see that from the time ICICI Bank broke its all-time high in 2020, the stock has almost doubled. So this is the same return given by Nifty, the stock has almost doubled. So that means here we can try to combine two approaches. One, I'm trying to pick good stable companies, but I'm only going to remain in companies which are fundamentally sound. So let me just come to the mid cap space. When we come to mid cap space, there are two prominent IT companies in mid cap space. One is L&T Mindtree and second one is Persistent Systems. So both have really good fundamentals. So let me just show you that. So when I open L&T Mindtree, so you can see that the profits have consistently compounded at 32% for the last 5 years. Similarly, when I open Persistent Systems also, even here, the profits have consistently compounded at 25% for the last 5 years. But when I open both of these stocks on the chart, so let me just show you L&T Mindtree. So you can see that from the initial run up in 2020, the stock is yet to get its momentum back. It is way away from its all-time high. From 2021, the stock has just surged 31%. Whereas you can see that there is relative strength in Persistent Systems. So if I have both the list in my portfolio, I can see which stock is having more momentum and stick to that. You can see that Persistent Systems also made a peak along with Mindtree and came down, but now it has already broken its all-time high and heading higher. So this is a difference between just sticking to consistent compounders and sticking to compounders with momentum. Right? Let me show you one more example of Bajaj Finance, which I personally hold. Right? So when I show you the financials of Bajaj Finance, so this is a fantastic company which was doing really well. You can see the net profits from the last 5 years have almost grown 2.5 times. On the other hand, there is Chola Finance, right? So this is also a fantastic mid-cap finance company. So when you look at the Chola Finance financials in the last 5 years, again the profits have almost grown around 3 times. So now let me come to the chart. If you look at Bajaj Finance, it made its peak during 2021, and after that it is unable to retest or cross its high of 8,000. So in the similar time frame, you can actually take a look at Chola. So it broke its all-time high, but it was at a momentum. Even though after correcting in 2021 along with the market, it very well gained its momentum back and started to hit all-time high. Now, if I had invested in Bajaj Finance in say 2021, I would actually be having negative returns. But if I had invested in Chola during the same period, I would have doubled my money. So here is a very important thing we have to note, that along with good fundamentals and consistent compounders, it is also very important for the stocks to have momentum. If the stocks are not in a momentum, then your portfolio is not going to grow. So that's why the simple solution to this would be make a list of all top stocks and just try to identify the stocks which are in a momentum. And generally, whenever the stock comes to momentum, the performance is going to be much better than the other stocks. So let me just show you the case of ITC. So ITC is a classic example where we found both value investing and momentum investing. So let us say you were a value investor in ITC who started purchasing ITC from the level of 270, 280, and let's say in 2017 you started purchasing ITC and started averaging it out. Right? You would have purchased around 266, 300, then you would have purchased around 200 and again around 250. So your average price would be around 250 and you would have held this company for close to around 7 years from 2017 to 2024. So holding this for 7 years, your money would have grown 75%. When we compute the CAGR, it hardly comes to around 7 to 8%, with the dividends maybe around 10 to 11%. But if you had entered the same stock when it actually gained momentum. So when do you say the stock is gaining momentum? Whenever it is relatively stronger to other competitors and it is breaking its 52-week high or all-time high. So whenever it is breaking its 52-week high, generally there would be a lot of interest in investors to purchase the stocks, which will actually put the stock in the category of momentum. So in the last 3 months itself, you would have generated a return of 30% rather than holding it for almost around 6 to 7 years just to earn 75%. So this is a classic case of most of the top companies. So many investors I know are stuck with HDFC Bank, Kotak Bank, which is not performing. Right now, Kotak Bank is offering great value. The profits are growing really well, but the stock is not performing. So this is again the same case what happened with ITC when the financials were well, but the stock was not performing. So it took some time for the stock to come to momentum before it could start to go higher. So this was one thing which I learned in my investing journey. And let me now show you the portfolio which I initially built in 2019. So I was trading in Kite around 2018-19, and I had created a portfolio for myself by investing 1 lakh. So you can see this portfolio is only up by 37%, but at the same time, the index itself is almost up by 100%. But similarly, if I actually end up showing you the portfolio which I created in April, where I tried to pick good fundamental stocks with momentum, this particular portfolio is already up by 25% in just a matter of 3 months. So right over here, I have opened my first stock back office, and when I actually show you the equity P&L, so this is around close to around 19 lakh on an investment of 60 to 70 lakh. So this is a return of close to around 30% just in matter of 6 months. So now look at the comparison. I have made the same kind of returns by holding a portfolio for 4.5 years, and similar kind of return has been achieved in just 6 months by investing in companies with momentum. So now for people who like consistent compounders, you do not have to change your approach. You can stick to good fundamental companies, but just make this slight tweak where you end up purchasing companies which are having some good momentum, so you can ride the rally. And once they start to lose momentum, so for example, let's say I'm sitting on ICICI Bank. So once I see that HDFC Bank is breaking its all-time high of 1750, I can slowly start shifting my portfolio from ICICI to HDFC, because even now HDFC has also started to gain momentum. Similarly, let's say I have Chola, which I don't, but assuming that I had Chola, and later Bajaj Finance, maybe over the course of next 6 months, breaks 8,000 and starts to head higher. Now I can start to shift my allocation from Chola slightly towards Bajaj Finance, because now Bajaj Finance has also got momentum because it has broken its all-time high and 52-week high. So this way you can try to balance your portfolio and try to optimize your returns. Because as I told you, as traders, it is very important that our passive source of income, that is investing, also compounds at a consistent rate. So that is what we'll be adding to our trading capital. And also, whenever the stock goes out of momentum, you can very well exit it. So this is one very important lesson which I have learned, and I have made changes from this year so that my 6 months return is as good as my last 4-year return in the stock which I had initially picked. Right? I hope this video was informative and you were able to take out some key points out of this. I hope this particular video was useful and you are not going to repeat the same mistakes which I have. So in case if you have found any insights from this video, do not forget to hit the like button, share this video, and subscribe to my channel. Thank you so much for joining.